Lauren Scott was scrolling through TikTok when she saw an influencer promoting a fintech banking app named Yada Savings. The app offered a chance to win cash and other prizes, on top of earning interest as well. In addition, there were no fees, and it was being advertised as FDIC Insured. Eventually, Scott and her family moved all their money to Yada Savings. Now, after the bankruptcy of a company tied to Yada, the Scotts are among 200,000 customers who are not able to access their FDIC-insured money. So is your money really FDIC-insured? Or could you be the next victim in this tangled web of banking? Trust us, this is a story that everyone should hear, especially if you have your money with an online bank or fintech. Okay, now let's get started. The first thing we'll do is list the key players involved so you can quickly get an understanding of what happened and how it may affect you. The first player involved here is the FDIC. As a reminder, FDIC insurance ensures that your money is safe should a bank fail. For more info on this, check out our video about how FDIC insurance works. The next players involved here are the fintech companies offering banking products. This includes companies such as Yada Savings, Juno Finance, Copper Banking, Sunny Day Fund, Abound, and more. Now, it's important to note that these fintech companies are not banks. What they technically do is offer banking products, such as checking or savings accounts. But they don't actually hold your money. So who holds the money? Well, these fintech companies work with partner banks who actually hold the deposits. For example, if you bank with Chime, the banking services are provided by the Bancorp Bank or by Stride Bank, which can be seen on the front page of Chime's website. So again, just to reiterate, fintechs offer banking products, but the partner bank is technically the one offering the banking services, including FDIC coverage and holding deposits. The bank that Yada Savings chose to partner with was named Evolve Bank and Trust. Okay, now this is where it gets a bit tricky. The next player involved in this tangled web is a company named Synapse. Synapse is an independent third party, which was basically a middleman that connected Yada Savings and Evolve Bank and Trust. Unfortunately, in May of 2024, Synapse was going through a bankruptcy and was running out of money. So, Synapse cut off the connection to Yada Savings, and customers were no longer able to access their own money. In the end, somewhere between $65 million to $96 million of customer money went missing, and no one knows where it is. And this is why Yada Savings customers, along with other fintech customers, have not been able to access their money since May 2024. So, what exactly does all of this mean for you? Is your bank really FDIC insured? Or could you be next to end up in banking purgatory without access to your life savings? Most important, what can you do to prevent ending up in this situation? Well, first and foremost, if you bank with a traditional bank, then your money is almost certainly safe, up to the FDIC limits. However, if you bank with an online bank or fintech, then the answer can get murky. In the case of Synapse and Yada Savings, the FDIC has basically said that it's not involved because there has not been a bank failure. Remember, the company that failed here was Synapse, which was an independent third party, not a bank. The FDIC even put out a bulletin after the Synapse disaster, which stated, quote, FDIC deposit insurance does not protect against the insolvency or bankruptcy of a non-bank company. So, if you do bank with an online bank or fintech, what should you do? Well, you should be aware of all the facts so you can make an educated decision on what to do next. Of course, we're going to help you do this. And to do so, we're going to compare Chime and SoFi, which are two of the largest players in this space. As we stated earlier, Chime is not a bank. It is a fintech that offers banking products, and those banking products are technically serviced by a bank. The banks that Chime partners with can be seen on its website. This means that if your money is with Chime, it's not FDIC insured by Chime itself, since again, Chime is not a bank. So if Chime or any of its middleman companies were to fail, it's likely that FDIC insurance would not be triggered. However, if one of Chime's partner banks was to fail, then FDIC insurance would likely be triggered. So a company like Chime is basically in the same boat as Yada Savings and could technically end up in the same situation in a worst-case scenario. SoFi, on the other hand, started out as a fintech, but in 2020 they purchased a small California-based bank. This means that SoFi itself is now a bank, which means that they hold their own deposits and are themselves FDIC insured. Therefore, if your money is with SoFi, then it's likely that your money is FDIC insured in the same way that it would be with a traditional bank. So what does this mean for customers of Chime or other fintechs? Well, that's up to each one of those customers. If they don't feel like their money is secure, then they can shop around and look for other banking options. If that's not an option, then it may be best to only use fintech companies to pay bills and make purchases. Any savings or additional funds are probably better kept with a bank that is fully FDIC insured. This way, your exposure is minimized. When shopping around, most reputable online banks and fintechs should have their FDIC info listed on the front page of their website. For maximum security, look for banking providers that are their own bank, such as SoFi, Chase, or Wells Fargo. If you see that a fintech works with a partner bank and you choose to open an account with them, then your money is potentially at risk. As usual, what works for one person may not work for another. But we want to make sure that we arm you with the proper information so you can make your own informed decisions and keep your money safe. Okay, that's all for today. We hope this video was helpful and easy to understand. If you have any questions, just ask us in the comments below, and we will do our best to answer them. We would also love to hear from anyone who was caught up in the Synapse fiasco and is currently not able to access their money. Which fintech did you bank with, and how long have you not had access to your money? Let us know in the comments below. Please remember to subscribe, like, and click that notification bell. Thank you, and we hope to see you soon.